The State Bank of Pakistan has capped bank charges on digital payments for fuel purchases, following long-standing demands from petroleum dealers who argued that high transaction fees were eroding their already thin profit margins. Under the new policy, the merchant discount rate (MDR) for debit and credit card payments at fuel stations has been capped at Rs 1 per litre, while charges on digital payments made through Raast QR codes and online transfers have been limited to 20 paisas per litre. The revised rates will remain in effect until January 31st, 2027. Previously, banks were free to set their own transaction charges, with fees ranging between 0.7 and 1.5%, translating into cost of around Rs 3 to 4 per litre. Petroleum dealers had argued that these charges were unsustainable, given that their regulated commission stands at only Rs 8.64 per litre, from which they must also cover taxes, salaries, electricity, rent, and other operating expenses. The All Pakistan Petroleum Dealers Association welcomed the move as a positive step toward promoting digital payments, but maintained that the revised charges remain higher than economically justified. APPDA spokesperson Hassan Shah said the issue had become more severe after the government introduced daily fuel pricing, as dealers often book supplies around 48 hours before delivery, exposing them to price fluctuations while continuing to bear transaction cost. In its notification, the SBP said the decision aims to encourage wider acceptance of digital payments at fuel stations and accelerate the rollout of interoperable Raast QR payment systems. The central bank also capped the interchange reimbursement fee on card transaction at 20 paisas per litre and directed banks to work with the fuel stations over next 6 months to ensure Raast QR payment facilities are widely available. The SBP said it would review the pricing framework around January 31st, 2027 after assessing the market response. Despite welcoming the reforms, the APPDA urged the central bank to reduce charges further, arguing that fuel is an essential commodity and should have among lowest digital payment acceptance costs. The association said a modern point-of-scale terminal cost around Rs 30,000 with monthly maintenance expenses of roughly Rs 5,000, costs that can be recovered through transaction volumes without imposing significant per-litre fees. The association also called for zero or near-zero MDR on Raast QR payments, saying lower costs would naturally encourage dealers to promote QR transactions over traditional card payments. It further urged banks to provide free QR onboarding, staff training, and technical support, while recommending cashback offers and reward programs to encourage consumers to adopt digital payments. According to the APPDA, reliable uninterrupted payment systems and quick dispute resolution will also be essential, as fuel stations operate around the clock and payment failures can directly disrupt customer service and business operations. For more, read the full Dawn story link below.